is Paolo Sironi. Introduce myself in the meantime. I am a spokesperson for investment and risk analytics at IBM worldwide, and I'm thought leader for FinTech. I was a risk manager. I then created a FinTech company in Germany in 2008 that was bought by IBM, and I was listening to great interest to the conversation that we had this morning, the guy from Feeder and the CEO of BPC, because my story is about partnership with the bankers from the beginning instead of looking for VC money, to find different type of funding and a pipeline to prove on the business model the way to use technology. So I think that's a very interesting way of doing it. There might be other ways of doing it. We have very good experiences today that we want to share that come from the panelists. So if you are ready to go, I might want to introduce you to all of our speakers. And the way we want to do this today is basically, let me see if this is up. Okay, so we're going to pose some questions and we show some catch images to invite into the conversation. So we have today Tiffany Saltini. She's the CEO of Neuroprofiler, basically a game that helps advisors to understand their customers and to profile them. We have Alexandre Gaillard, which is the CEO of InvestGlass. We have Geoffroy de Schrevel, the R is there, which is the CEO of Birdee. And we have Maxime Camus, the CEO of Grisbee, which is a brand new reality that was recently launched. So I would like to invite our panelists to do a couple of things, not just to discuss about their opinions on the fintech and the wealth tech scene, but also share with you some of their experiences as they decided to become entrepreneurs. We would also love to, or at least I would love to hear about their motivations, so the reasons why one day they decided to jump. And basically they had a bright future in front of them, you know, but the very beginning is always very difficult until you manage to float. So I will start with you, Tiffany. If you could share with us which was your motivation, why you decided to create a Neuroprofiler, and share it with the colleagues. I believe there might be people that are founders of startups themselves or working for banks, so they are intending to do that. So it could be good to share experience.
Since high school. Thank you. So we're working perfect. So this is really my passion for more than 10 years. So I studied both cognitive science and business. I started a PhD in behavioral finance, but at the same time, I was also working as a consultant for different financial institutions. And I realized, working for a private bank, that the way financial advisors were assessing the investor profile of their clients had many weaknesses, and that it was possible to use the powerful science of behavioral finance to help financial advisors better assess the investor profile of their clients. So I decided to dedicate one part of my PhD to build a business-friendly application for financial advisors to assess the investor profile of their clients. And this is basically how Neuroprofiler was born. And then I had the chance to meet my co-founder, Julian, who had a very strong background in big data analysis and machine learning. So we are like two geeks, one in behavioral finance, one in machine learning. And together we built the algorithm of Neuroprofiler. And now it's working quite well.
So you want to use an algorithm to understand how humans behave?
Exactly, yeah.
Okay, so we need to have humans to understand how the algorithms behave as well. Should go both ways. So Geoffroy, what about you?
Well, I don't want to be disappointing, but I haven't been born as an entrepreneur, and I'm not a serial entrepreneur either. Actually, it's much less glamorous than that. It all started with a phone call from a person saying, well, we've got this spin-off from HEC in Belgium, and either we're going to wind it down, or we're going to find someone who can take that spin-off over. And by the way, you're not the first on the list, and all the other candidates have already said no, thanks. I say, okay, great. So I went to HEC and met with the founders. And after half an hour, I said, well, this thing is much too clever for me. Those guys speak a language I don't understand. I mean, they took math, they took algorithms. I've got no idea what they're talking about. So I went back, a bit skeptical. And then that same evening, I was on a movie theater queue, and there was this old lady, and she was talking to her, but I figure out was her grandson, but I have no idea whether that's reality or not. And she explained to him that she had invested in internet companies before 2000, being advised by her banker to do so. And of course, she lost quite a lot of capital, as you all would have guessed. And then she said, well, never again I will invest into a technology company. So a financial advisor, that's what she said, told her that, invest in banks. That's safe. Invest in banks, that's really, you don't take any risk. And then comes the subprime crisis, and she went to the cleaners again. And I said, well, probably that's interesting, and that's the reason I should do it. So I called the HEC professor the next day. He called me in. I'm going to do it. And then since then, they haven't kicked me out, and I enjoy it.